Joining me now with more on the markets, how to navigate the current landscape in the equity markets and the economy, is CEO and President of RDS Wealth, Dale Smothers. Dale, it's great to have you on the show this morning. And as we come on the air just about 30 minutes before the stock market trade, what can you tell our viewers about the state of play?
So the CPI report that came out, if you were watching the pre-market, Kristen, you saw an immediate spike in a lot of stocks across our watch list, at least. The SPY, which tracks the S&P 500, also saw an immediate spike. Now, right before we came on, I was checking that, and it looks like it's given back most of that spike from the CPI report. There's a lot of conflicting data here. Clearly, the 90-day reprieve from tariffs, these retaliatory tariffs that were on the docket initially, that 90-day freeze is going to give us a lot of optimism in the market. This market wants to run higher, but China's still a big player. And until that China piece gets solved, I think you're going to see a lot of volatility. You're going to see a lot of whipsaw effect that then bleeds back what we've gained, perhaps even a little bit of what we ran up in this historic run yesterday. We might see a little bit of that given back today, unless some big news breaks that China is finally coming to the table, Kristen.
I'm just curious here what you would recommend to perhaps some of your clients who might be looking at retiring soon in a market that is seeing a lot of the whipsaw action, as you mentioned.
Kristen, a lot of this started back in January. If you were retiring or close to retirement, we've been preaching for months now, get your financial house in order, moving things to money markets, moving things to option strategies, which give us some downside protection. That's where your income should be coming from right now. Do not sell securities at the lows to get the income that you need in retirement. Now, if you are just a few years away from retirement, you may look at this and think, I am in really bad shape. I was going to retire in a year or two, and now can I steal? I think that we see a V-shaped recovery here. Once everything settles down, we're going to see, and clearly yesterday is a representation that there is optimism in the market. You should be investing your portfolio to embrace this optimism, but in a way, and what we are using is a lot of equity options that are giving us correlation on the upside, but we can decorrelate when we see the pullbacks like we saw over the last 3 or 4 trading days. It's not a wise decision to time the market. You've got to have some money that is safe, secure in this turbulent time, and I expect this to be a 6 to 12 month period of extreme turbulence. And in order to retire successfully, you've got to know that your income is secure during that time.
I'm curious here as to the impact that we could see this have, Dale, on GDP growth, because that is another element that we've seen in addition to the tariff talk and the changes, quite frankly, in trade policy.
Yeah, so GDP is certainly going to be one we're watching very closely. And I'll tell you another piece that we're going to watch is the earnings guidance from CEOs during earnings season coming up here. Whether or not this stock market gives back some of those gains is going to be dependent upon what we see in the PE ratio. What is that E going to be? What is that earnings going to be? And ultimately leading to the GDP. Now, granted, this is what we consider the second lever of Donald Trump's plan. Number one is to cut spending, which Doge has implemented. Number two is to raise revenue, which in theory, this is what the tariffs are supposed to do to hopefully balance this budget. And I think we see some tax reform coming as well. Deregulation should help the economy overall, but it is certainly a time to almost hold your nose and buy some of these stocks as we dollar cost average into a potential low that may be retested over the next 2 to 3 weeks.
Interesting. And earnings season, we know, officially kicking off this week as well. We had Delta Airlines report yesterday. Did basically not update, in fact, its guidance for the year because of this particular environment that you mentioned, Dale. We'll get some of the big banks reporting like JP Morgan and Wells Fargo tomorrow. How does earnings season factor in and the commentary that we could get from executives amid this environment?
Earnings season is key. A lot of what we're going to see, and so earnings that are going to be posted, the CPI that was just recently posted, it's kind of like looking in the rearview mirror when we are coming up on an S curve. How to navigate forward is going to be based off of earnings, not last month's CPI data, not last quarter's earnings. It's future earnings, and those are going to be hopefully some guidance that we get from the calls that we listen to with these major companies that are big players. I think that what happened yesterday in the bond market probably forced the hand of the president to kind of put this 90-day reprieve into place. This 90 days, what kind of progress do we have over the next 90 days? What kind of tax reform do we have over the next 90 days? And granted, that is what is going to determine how this stock market behaves. I think the market wants to rally here, Kristen. I think it wants to rally. It's just a matter of the uncertainties of everything that lies ahead.
Yeah.
So looking at last quarter's earnings is probably not something we're going to be as much concerned about as future guidance coming from these CEOs.
Yeah, that guidance very key. Dale Smothers is CEO and President, RDS Wealth. Dale, thank you.
Thank you, Kristen.